Hello, this is Matt on the Moon Lambo channel. In this video, I'm going to share with you a brand new blog from Aaron Martinez. Just came out today here, and I thought it'd be fascinating to share with you somebody else's take on an interesting topic that really nobody, I don't know if anybody's really written about it quite like this, so I look forward to sharing it with you. That's actually all I'm talking about in this particular video. If you would please delicately tap that like button, and if you are a fan of Ripple and XRP, go ahead and subscribe to the Moon Lambo channel. Alright, so here's his blog page. It looks like he's just got 2 posts, and I was already following Aaron, but didn't realize that he did any writing in any capacity, so I thought this was cool to come across here. So anyway, this piece titled, The Relationship Between Equities and Crypto. Recently, there has been a narrative for the past few months that cryptocurrencies, or the current digital assets traded on the open market, are non-correlated assets to the traditional markets. While this rhetoric has been reiterated, there has not been any substantial evidence backing these claims. General retail investors would stereotypically agree that the crypto market behaves in a chaotic manner, untethered from any external influences and simply driven by its gradual adoption as a means of transacting business without third parties or as a haven. But given historical macro movements, it appears that there has been a correlation to equity markets. Intermarket relationships typically become exaggerated during the months of large macro movements in the markets, allowing relationships between assets to be easily observable. While the crypto market is relatively young, there are several instances within the past few years that have met these conditions. The infamous bull run of Q4 2017 and the September movements of 2018 were 2 distinct periods where the intermarket relationship between the cryptocurrency market and equities appear. For the sake of discussion, my observations will be primarily focused on XRP. Both Bitcoin and Ethereum will be sparingly mentioned as most digital assets moved in tandem during these periods. So I got December of 2017. During the period in which both Bitcoin and Ethereum rallied into Q4 2017, altcoins were experiencing both drastic and exponential bursts of appreciation and corrections. These price movements were often random and unsupported by any announcements or developments in their blockchain networks. And while retail investors in the crypto market were perplexed by these movements, managers and investors outside of the space realized a bubble was forming. XRP's sudden ascent into a single-digit dollar late... Oh, gosh, sorry, I got my McAfee popping up here, which I don't know why it's on my computer. I don't know if I accidentally installed something. It's ruining my video. I'm so sorry about that. XRP's sudden ascent into single-digit dollar late December spurred rumors of elaborate projects going live on the XRP ledger, or that massive funds had begun to invest into the digital asset. Yet understanding the financial and economic environment during this period provides valuable context to XRP's movement. At the time, the U.S. domestic economy, along with other major economies in the world, began to enter the late cycle economic phase. Throughout 2017, global markets were experiencing a bull market that was reflected in equities. Bull markets tend to create feedbacks in which investors continue to reinvest or utilize more capital as assets rise in value and new market participants enter. As lenders and speculators gain money fast, speculators' equity grows, giving them more collateral to secure new loans to reinvest, which reinforces the bubble. That absolutely happened, did it not, boys and girls? Yes, it did. And things escalated quickly, I would say. Anyway, as speculators continued to make more money, they began to reinvest in even riskier assets. The crypto market at the current time was a completely new and unregulated market to retail investors, making it extremely speculative. As investors from the traditional markets continued to earn capital, they began to seek other avenues to make more money. Eventually, more and more investors found themselves entering into the crypto market after either hearing or seeing how participants were doubling or tripling their money effortlessly and quickly. And let me ask, for those of you that were around, I'm thinking back to specifically November 2017. That is the month that I entered the world of cryptocurrency. I bought me some Ether, I bought that. I bought Litecoin and Bitcoin all in the same day, and then a week later, I bought XRP, my first non-Coinbase listed asset, which was a pain because I couldn't. Back then, you could not buy XRP directly with your checking account in the United States. Man, that's how undeveloped all of this was. But I remember having Thanksgiving dinner with my family. And I think that our family was doing the same thing every other family, probably in the entire United States, was doing, talking about cryptocurrencies. And you could see it because I think it might have been the very next day, prices just went they took off like crazy. And in the coming days, it got completely nuts. And so it just escalated the frenzy further. And you know what that culminated in about a month later, almost $20,000 Bitcoin. Yeah, pretty crazy stuff anyway. I'm sorry, where was I? Eventually... during a bull market, investor psychology begins to change due to the influx of money being made. This eventually causes a shift in investor mindset where the appreciating assets they own are sacred to them and that anyone without them are missing an opportunity, which exactly matched the general sentiment around the crypto market in Q4 of 2017. Essentially, the performance of global equities created a spillover of capital that reached digital assets. Looking at the historical charts during this period and overlapping them, one can visually see this movement. Equities and the total market capitalization of the cryptocurrency market reached all-time highs within a month of each other. Along with reaching all-time highs in unison, markets began to roughly correct simultaneously, with crypto being the first to do so. This was easily explained as cryptocurrencies are extremely speculative in comparison to the equity markets and thus carry the most risk. As markets began to reach their tops, riskier assets began to sell off first, which was then followed by other, more traditional financial assets. And if you are not driving, feel free to take a look at the chart that Aaron put on the screen here. All right, and I'll scroll down. In order to find how strong of a correlation between U.S. equities and XRP during this period was, one would have to calculate and compare their respective performance. There are several methods of calculating relationships between assets, but my methodology will be focused on calculating the Pearson and Spearman coefficient. Both calculated and the Pearson and Spearman coefficient will measure the extent of how linear the relationship between both assets are. Both coefficients are also valued between -1 and 1. A positive coefficient implies a positive correlation, while a negative coefficient suggests the relationship being inversely related. Along with that, a coefficient around 0 indicates the relationship between both assets is extremely weak. Spearman's correlation determines the strength and direction of the monotonic relationship between the assets rather than the strength and direction of the linear relationship. A monotonic relationship is a relationship that does one of the following. As the value of one variable increases, so does the value of the other variable. Or as the value of one variable increases, the other variable value decreases. The following calculated coefficients use both the SPX and XRP daily closing price, excluding the weekends, from January 3rd, 2017 to May 10th, 2018. Ending at May due to visually seeing a divergence begin between both assets. A total of 341 observed daily closing prices for both SPX and XRP were observed. The Pearson coefficient between the assets was calculated to be 0.783669, while the Spearman coefficient is 0.861674. Both coefficients calculated suggest a moderate to strong correlation between the S&P and XRP during this period, confirming the assumed correlation derived from visually interpreting the overlapped historical charts. And I don't know about you listening to this out there, but I have never even seen anyone attempt to specifically to draw that conclusion, just to do that comparison in the first place. And again, specifically comparing S&P and XRP. Genuinely quite fascinating. And then he's got 2 bullet points stating his final thoughts. So here's the first one. Due to the crypto market being illiquid and having shallow order books compared to equity markets, cryptocurrencies experienced exaggerated movements compared to equities. That is a very good point, and that's a point that I had made in the past. It's very easy, in fact, to manipulate the market because it is so illiquid. If you are a whale, it really, relatively speaking, doesn't take that much to ramp things up or tank take the price of whatever cryptocurrency you want to. And the smaller cap coins, so that really just in general, the smaller the coin in terms of volume and price, the easier it is to manipulate right there. And so it doesn't take that much for people to jump in, given how illiquid crypto is, and just spike prices instantly. And so we've certainly seen that, and we're not done. And that's part of the reason that if you want to know why just one of a bazillion reasons why it's likely that crypto will go parabolic again, it's right there. Crypto is illiquid. It doesn't take that much to set it off. It's a global phenomenon, a brand new asset class, and we're in the beginning phases of it. I don't care that we're a decade in. That's going to be nothing, because this is going to be around for as long as the internet exists. We're going to have this asset class. So think about it that way. Here's the second bullet point. He states the May divergence can be attributed to many factors, such as governments clamping down on exchanges / cryptocurrencies, while warning retail investors that crypto was an unregulated space and penalties could be handed for illicit activity. Another possibility could be that capital began to flee in the wake of a bear market, beginning in cryptos and along in global markets. Yet it's possible that capital began to flee because of the bear market. Maybe some did, but what I had seen, and I didn't have reports prepared specifically on this point, but during the bear market, I think it was more so the case that in terms of infrastructure, more was being built out. And so to what degree part of that was just institutional investors, I don't remember. I don't have numbers just off the top of my head, but I've over the last 1+ years, I've been reading stuff like that. So there was a lot of development actually going on. So as far as how much capital was actually exiting, well, of course, a lot of from retail speculators, certainly, and in terms of price action, yes, you saw that. But in terms of infrastructure and certainly to some degree institutional money coming in, it might have been going the other direction, actually. So it's a fair point, though, regardless. September 2018, check this out. Although a divergence followed the market corrections of early 2018 between equities and cryptocurrencies, the correlation would reemerge later in the year. While digital assets further depreciated from a correction into a bear market, equities rallied the following months from May. Global equities rose to month-long highs in October, with U.S. equities reaching their previous record highs at the same time. Crypto, at the time, was finally stabilizing itself from the previous correction in January and began to consolidate. But without any developments or announcements, XRP saw its value rise significantly in September 2018. In respect to the other digital assets, XRP was the only major digital asset to experience such drastic change within a couple of days. The extreme movement once again spawned several rumors of entities utilizing the XRP ledger for operations. But U.S. and global equities during these months provides an insightful context to the digital assets movement. And by the way, before I read further, I had actually commented on this in the past, and it was really just an observation. This is a more in-depth analysis on this particular moment in time. But I had commented that people were it was a rumor mill, basically, like Twitter, people all over the place, and it was, I couldn't not being able to decide if it was late August or early September, whatever it was, but it was around that time period that XRP price ramped up from 25 cents to almost 80 cents. And when that was happening, what everybody seemed to think triggered it, and I must admit it was in line with the rumors, it was that XRapid was said to be going live soon. It was allegedly a leak. And ended up being true. It did go. XRapid, the production version of XRapid, did indeed go live in October of 2018. So I've always assumed that that had something to do with it. It's one of those instances where, hey, something leaked, and there actually was a resulting effect in price. Anyway, so let me read a little further. For example, U.S. equities once again topped in October, and began to enter a period of correction, with XRP reacting and following the market. To further support the argument of the equity's influence on crypto, XRP mirrored the stock movement of SBI Holdings. SBI is a major shareholder of Ripple and promoter of Ripple's technology in Japan. forming the Japanese banking consortium intended to use Xcurrent for domestic rails and SBI Ripple Asia, a subsidiary meant to drive adoption of Xcurrent and Xrapid in the Asian Pacific region, explaining the inexplicable tandem in movement between XRP and SBI's stock. Calculating the Pearson and Spearman's coefficient describing XRP's relationship between the SPX and SBHGF, which is the SBI stock symbol, provides support. Observe daily closing prices of SBHGF, SPX, and XRP from September 17 to December 14th was used in the calculations. The intermarket relationship of XRP and the S&P displayed a Pearson coefficient of 0.509245, along with a Spearman coefficient of 0.600470, suggesting a moderate positive correlation between assets. In respect to XRP's relationship with SBHGF, the Pearson coefficient during this period was 0.712559, with a Spearman coefficient of 0.706631, a strong positively correlated relationship between the assets. In comparison to the correlations between strength in 2017, the S&P and XRP's relationship weakened, but XRP's tracking of SBI's stock reinforced the notion that crypto was still being affected by equities. But regardless of the amount of market participants, capital, or volumes traded, money from the traditional markets entered and withdrew themselves for the second time. That's amazing. So apparently there was some reasonable correlation. Check it out. Then he says, final thoughts. He's got 2 bullet points on this one also. An explanation on why the calculated Pearson coefficient weakened the second time around could be that the sample size of the data taken is much smaller in comparison to the original calculation. The crypto market was a lot more regulated than what it used to be, possibly dissuading previous participants from the traditional markets or entering again. And then point 2. There appears to be a pattern in which whenever equities reach a localized high, the crypto market potentially receives an influx of capital from the traditional markets that causes a rise in valuations. Fascinating. Understanding and observing one we're jumping to present day now, by the way. Understanding and observing one of the main historical influences on cryptocurrencies can help us interpret the movements of today. The economic and financial environment also provides valuable context in interpreting current movements. Back in 2017, cryptocurrencies were the new fad where money was to be made. Currently, there is a similar movement going on in the traditional markets that involve IPOs, displaying a similar bullish or even FOMO, fear of missing out, sentiment crypto witnessed by the general market. These past few months have also seen very familiar movements in the markets. In the month of July, there was a broad rally across on all different types of assets. Whether it was the more commonly traded stocks or the defensive assets such as bonds, much of the market rose synchronized. Even speculative assets such as crypto, which are the last to receive capital due to their risk, witnessed a rise in prices. With Bitcoin and Ethereum broke out of their downward month-long trends to post new relative highs, with XRP seeing movement as well, but not to the degree of the other digital assets. And as equities began to top out again, corrections throughout the markets began to ensue. Currently, it appears that what traders witnessed last October and even further back, January 2017, in the markets has occurred again. The third time in which cryptocurrencies and equities have topped and corrected in tandem. Yet past performance is not indicative of future performance or movements. And while I personally believe that this relationship will change in the future, observing and considering historical trends helps us to put the cryptocurrency market's recent movements into perspective. Time will tell. That's fascinating, isn't it? I haven't heard anybody else talk about this. Well done, Aaron. This is really cool stuff here. So, and I kind of think that because look, a lot of the speculation around this is just that, especially in the way that the asset class behaves, it's more of like a hedge against global turmoil. perhaps inflation even, just in general fiat currencies. And so it was fascinating to see that there's some data here apparently to point to a correlation between equities and cryptocurrency and XRP. How about that? So what do you guys think? Feel free to drop some comments below. That's it for this video. I am not a financial advisor. Do not buy or sell anything because of anything that I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo!